Howdy, Jacob here. Today we're looking at FIVN incorporated in the software industry, 2.9 billion market cap on 2.7 billion enterprise value. They provide intelligent cloud software for contact centers in the US, India, and internationally. They offer a virtual contact center cloud platform that delivers a suite of applications. Incorporated in 2001 out of San Ramon, California. Okay. Their revenue growth has been astronomical over the last 10 years, as high as 40%, and low is actually the most recent year at 16.9%. Increasing gross margin, technically increasing operating margin, going from negative 34% to negative 11%. They're still in the growth phase, though, so not terribly surprised by that. Income statement shows good amount of money going to R&D, 157 out of 910 last year is 157. That's going to be, oh, that is not what I'm looking for. About 17%. So 17% of revenue is being reinvested through R&D, taking money away from today to hopefully make more in the future and become more efficient. Likely not all of these dollars are going to be hitting the bottom line and making the company more efficient, and even hitting the top line, making it more money. But the ones that do and really work out, these can be massive returns on investments. So balance sheet shows quite a bit of cash-like products. So a little under 600 million short-term investments, 143 million cash on hand, with 742 million long-term debt. So not concerned with this balance sheet at all. Their cash flow statement shows a good amount of production of free cash flow recently. So they were not producing positive free cash flow in the mid 2010s. And then a little bit before COVID, they started producing free cash flow, and are now producing a good amount, close to 100 million. And they're reinvesting a lot. Reinvestment and acquisition are by far the heaviest forms of capital allocation. And so this could be an interesting analysis. So when it comes to these type of businesses, I usually am a bit on the conservative side in my perspective. So I presume that to other people's perspective, it's definitely conservative. But I just want to be realistic with my thoughts about the business and what I think they can do. A company that's growing this much, that has historically reinvested as much as they have, I kind of like to presume the same. And so I think that this company, through reinvestment and acquisition, there's still less than $1 billion in revenue. There's still a lot of space to grow here. And so I think 12% seems pretty reasonable to me. Based on that, I think a 20p in price to free cash flow at the end of 7 years is usually higher than I like to go for smaller businesses, but it is a business that's heavily growing and I think absolutely deserves a premium. And then for margins here, I think that they can make a bit more money down the line. So maybe let's do 12 and 15%. Again, this is kind of where the story meets the historical values. And so they haven't really made earnings yet. But again, when you're growing as much as they are, investing 17% in R&D, not terribly surprised by that. So I think margins are still going to be an investment phase at the end of 7 years. So that's why I feel like these are pretty reasonable, but still higher than they've ever been before. Shared change, 1% for them is about 30 million. And they do issue quite a bit of money through stock-based compensation. And so that's going to be maybe 5%. So right now, I think heavily growth company. I think there's a lot of opportunity with these type of investments when you can get them for a decent price and they outperform your expectations. I mean, when you think a company is going to grow 10% a year for the next 10 years and it grows 15%, the way effective interest rates work is just incredible. And so you're going to get a way massive return, way bigger than you thought. So if you can get it for a good price, a really good growing company with a good return on invested capital that is reinvesting, you're likely going to do fantastic on it. Is it that good price yet? To me, I don't think so, but I think this is one that can very quickly grow into its valuation as long as it outperforms my expectations. But again, personally, I don't like to assume things are going to do better than what I think they're going to do, somewhat conservatively based on the history. So I hope you enjoy this video and have a great rest of your day.